Welcome, everyone. I'm Mike Brashazade.
And I'm Ashley Ward.
And you're listening to the What Matters podcast, and our mission
to spotlight top RIAs, wealth managers, and investment professionals who are redefining wealth management.
Join us as we dive into their journeys, strategies, and insights.
Whether you're an investor or an inspiring pro, this is for you.
Get ready for impactful conversations on the What Matters podcast. Hey, everyone. Welcome back to another inspiring episode of the What Matters podcast. I'm your host, Mike Brashazade.
And I'm Ashley Ward.
Today, we're excited to welcome a guest whose career reflects deep dedication to clients and community. Joining us is Will Jackson, CFP, Chief Compliance Officer and Partner at Cahaba Wealth Management. With a rich background spanning institutional finance to personalized wealth management, Will brings a powerful perspective on building a client-centered advisory practice.
Well, Will,
thanks for having me.
Yeah, it's great to have you on the show, Will. Thanks so much for joining us. We're super excited to now have our second guest from Cahaba Wealth Management on the show. First guest, Brian O'Neill. Hopefully we're a little bit better and worked out some kinks since then. He was one of our very first guests on the show. I remember way back when.
Well, he's probably a good one to start with.
Well, we're super excited to have you here, as I said. And let's jump right into your story. I know we've learned a little bit about Cahaba in the past, but excited to hear where it's gone and learn more about you personally. So, Will, can you share a bit about your journey? You know, what led you into the wealth management space, and how did your path bring you to Cahaba Wealth Management?
Well, Brian O'Neill actually led me into being an RIA, fee-only RIA, CFP. I was in the institutional world straight out of college. I went to New York, trained as an analyst with Bankers Trust, which was later Deutsche Bank. And then I went down to, I was in the international equity team for a moment, and then they asked me to go down to Tennessee to help them close some deals in the retirement services area. I did that and ended up staying here. That was about 30 years ago. And from there, I joined a local investment bank called Equitable Securities, went into research, sales, and trading, and ended up in trading. We were bought by SunTrust, and SunTrust bought Robinson Humphrey. I did not want to move to Atlanta at the time. I wanted to stay in Nashville, so we ended up starting our own firm called Avondale Partners. And I was at Avondale for 12 years on the equity trading desk, ended up rising to running the equity trading desk, and then got bored. As crazy as that sounds, it just, with what was going on with high frequency trading, with algorithmic trading, with what was going on with institutional trading and co-location, and the SEC not really being aware of what those firms were doing and how they were taking advantage of it and creating an unfair playing field, I lost my passion for that. I didn't feel like I was helping anyone. So I decided to go into private equity. So I joined a group here in Nashville, and that was about 2.5, almost 3 years. I wrote the prospectus, sales memorandum, raised the funds, executed the strategy, managed the strategy. But then before I finished out that, I just didn't love private equity. I didn't like the incentive structure. I didn't like that it wasn't really focused on delivering a result to the client. It was really focused on delivering a result to the managing firm. And that just didn't line up with my sort of value system, if you will. And the group I was with was very much focused and liked that. So we were a little bit at conflict. So then I was going to probably go back into equity trading where my experience was, and I enjoyed it. And Brian, who was my best friend and my college roommate, teammate, we both majored in economics at Rhodes College. As you do with your best friend, you talk to him about your career stuff. And I said, here's what I'm thinking about doing. I'm mad at myself. I went to private equity. I thought it was going to be so great. It wasn't. And he was like, dude, stop. You've gained a lot of experience. So even though you didn't love it, you learned a ton. And then said, short story, I could really use you in Nashville. We're busting at the seams, and I need somebody. And I was like, I'm an institutional guy. I don't talk to individuals. And he said, it's not going to be easy. You're going to have to go back to school. You're going to have to get your CFP, and that's going to take 2 years. And in that whole time, you're going to have to learn how to be a financial planner. And it's different from what you've been doing, but I think you'd be really good at it. And it's a case of, when really good friends know you better than you know yourself, and you choose to have faith in their judgment, even though your inside voice is screaming, this is the scariest thing I've ever considered. I mean, I have 2 kids, middle school and just entering high school when I decided to do this at age 44. But it's this, it's a story of success. It's a decision I made with a lot of trepidation, but it's turned out to be the best thing I've ever done. So long story short, I've been with Cahaba here 10 years. I did get my CFP, and I like to say that I spent my formative years learning how the sausage was made. And now I put on the white hat and I tell people how to avoid eating bad sausage.
Nice.
Love that.
Yeah. So I love what I do. I'm very passionate about what I do. And I would categorize what we do here at Cahaba. Everything starts with how can I help you? How can I improve your situation? You're being the client, not how does Cahaba make more money? Sorry for the long answer.
No, wow. I mean,
That's
No,
it.
we appreciate that.
I love hearing all that. I feel like you've had experience in all the different areas of finance, and I think it's really admirable hearing a story, especially a success story of something you're doing now that you love and making that transition in your mid 40s, like huge transition, and it worked out well. That's not an easy job, and I'm sure many people probably wouldn't take that risk.
Well, I think the benefit I had and have is that I saw how the majority of the advisory service is delivered to the client. And it's done from a product standpoint, meaning what do I need to sell? I have smart, competent people to go out and sell this product to the public. Versus the way we approach what we're doing is it appropriate? What is appropriate? What does this client need? And then what is available in the market that fulfills their need? And then from there, you're just trying to make it as beneficial as possible from a tax perspective, from an expense perspective, really letting all of the things that are inherent within compounding, not only the performance, but also tax efficiency, also expenses, letting those things all get lined up so that the client ends up in a better place. Because if the client ends up in a better place, guess what? Your client retention's really good. Your firm grows at a very accelerated rate compared to the industry. Your clients tell everybody about you. You don't have to do any marketing. So, I yes, it was a weird change. Yes, I had a lot of fear doing it, but now that I think about it, good friends really do know what's best for you if you listen to them, and I'm fortunate to have one.
Yeah.
Yeah.
And
Yeah. My father always said to me, he goes, if you have one good friend, that you have one good friend, you're lucky.
Mm-hmm.
Right.
Yeah.
So,
Yeah.
yeah.
And
Yeah. So I totally agree with that.
I'm curious too. I mean, gosh, it sounds like you and Brian have gone through all the big life milestones together, from college roommates. And how's that been? I mean, now working with your best friend, tell us a little bit about that.
Yeah, it's we have personalities that are definitely different, but they're complementary. And I don't know why, but we recognize that very early on. So I don't expect him to be like me, and he doesn't expect me to be like him, but we expect each other to be true to who we are so that when we're together, we're, 1 + 1 = 3.
Mm-hmm.
And it's always been like that. I'm not smart enough to explain the psychology behind it. But we both trusted it. And there are other great friends we have within our group that are similar. It's just the two of us working together. And honestly, before I joined Cahaba, we spent about a good month really working through our friendship and how it would work out if this didn't work. The friendship was more important than the business opportunity. So it's been great. And, I've got other great partners here at Cahaba. The way we run our firm really, if you get to the ownership level, you've bought into everyone at that table and understand that everybody's pulling for everyone else. It's not an individual game here. It's a group think. And everything starts, again, not to be repetitive, but how do we make our clients better? How do we help them? And if everybody buys in on that mission, this company is going to do really well. But the company's benefit doesn't lead the discussion. The client's benefit leads the discussion.
Yeah.
And I do think that separates us from the majority of my competition.
And let me ask you this: in joining Cahaba, and the growth of the organization. When you had joined the organization, what was the AUM and the size of the organization when you had joined compared to now?
Oh, Mike, you're asking me to remember 9 years ago. I think, and if Brian watches this and I'm wrong, then I'm just going to say, sorry, buddy, you weren't on the call. I was. I believe we were somewhere around 450 in AUM. And we are at roughly 2 billion now.
Wow.
And we
How
have
many-
three offices in Atlanta, Birmingham, and Nashville, but we cover clients all over the United States.
Real cool. And let me ask you this: how many total advisors do you guys have, and staff members?
Total
teammates?
advisors, we have 12, and total staff is 22.
Really cool.
We're very lean and mean.
I love that.
Yeah, if you compare us to the industry, most firms our size have 45 to 50 people.
Mm-hmm.
Oh, I've seen it. It's insane.
Yeah, and everybody who's speaking with a client and doing financial planning is a CFP. We have an incredible bench of young people we're training. All of them are in the CFP curriculum. 3 of them are sitting for the exam this fall. One of them just passed. And then from there, we also have, what's a proprietary sort of referral system where the senior advisors are building books for the junior advisors so that you don't have that very unhealthy thing where you go hire somebody and tell them to go call their parents and friends and sell them product in order to get them to be established at whatever firm hired them. We're coming at it from a different angle. We have our young people going through the educational curriculum that they need in order to know what they're doing. And then we also give them as many opportunities to have the experience with actual real world clients so that they have that when they actually step into that senior role. And then they also have a pretty good book when they step into that senior role, because I can't cover 500 people. I don't want to. It's a disservice to the people who think they're my clients, but I can train really good people to service them and give them the same result they'd have, if not better than they'd have with working with me.
Mm-hmm.
An addendum to that is we're also really focused with bringing women into this industry. We're also focused in bringing people of color in this industry. Both of those are challenges, but I'm very proud to say of our last 7 hires, 5 have been women.
Wow.
That's great.
And 3 of them are on the CFP track. So and if you think about it, there aren't enough women in this industry, and there are a lot of women that are inheriting from their parents or are controlling an incredible amount of wealth in this country, and they need someone who looks and sounds like them and understands who they are, but is also equipped with understanding the rules and the best practices in order to lead them to success.
Yeah.
And that goes for people of color as well, and also people who look like me.
Yeah, it sounds like at your firm you guys really focus on promoting within.
Oh yeah.
Yeah. And
Yeah.
do you think that,
I mean, look, I'd love to find, if anybody's watching this and you're a mid-level advisor and you're at a shop and you don't feel supported and you want to do more financial planning and you feel like you're being told to sell annuities or product or something like that, call me.
there we go.
We'd love to have you. That's immediately accretive. I can bolt you in and train you, but you're going to train again. I'm going to have to teach you how to do it right and get rid of all the things you were taught that you thought were right. But, we're a really good place for that person who really wants to do it right and wants to do it long term.
Thank you. I feel like not enough of our guests do the shameless plug of, if you're an advisor, reach out to me. I mean, might as well.
Yeah.
Right?
They should. They should.
Yeah.
Right?
Sorry, you'll find out. I'm not afraid. I'm always. I should probably have ABC tattooed to my arm. Always be closing. So.
Love that. So do you feel that, that kind of creates that culture that has really been instrumental in scaling the firm? I mean,
I have to give our clients credit for that. 95+% of our new client acquisition comes through referrals. It's really crazy. And we have one person who is in Nashville who we have a deal with that goes out and potentially finds new clients for us. But that was simply because they found us, and they had previously been in the industry, and they knew a bunch of people and said, hey, could I do this? And we said, sure. But generally, it's just clients referring their friends and family.
Really cool. And let me ask you this: had you guys done any inorganic growth to Cahaba, or is it just all strictly been organic?
We tried, Mike. We went through a really long process with a lot of consultants and wasted a tremendous amount of time. And we identified a few firms that we were interested in, and we went through the whole process. And when it got down to submitting bids, our bid was so uncompetitive compared to the roll-ups and how much they were willing to pay, because we were concerned about integration and actual delivery of valuable service to the client, that it got to be the point where it's an arms race where, frankly, I'm not willing to pay the multiples that are required in order for you to win that. And what it takes is an extraordinary owner who's built up an RIA practice to be able to take less to the benefit of their clients. And that's a rare thing to find. So if they come to us, again, if you're watching this and you're an older RIA who runs a financial planning based firm and you want to sell to a firm that's going to take care of your clients because that's your main concern, call me.
Love it. And what I can tell you there is, you ultimately, when you take a look, when you take a look at those deals that you're talking about, where these multiples are just so outlandish, I will say, being on the other side, right? Ashley and I were obviously not our day job. We're in private equity. Being on the other side and seeing what a lot of the competition does out there is, yeah, they'll throw out a multiple that where you sit there and you go, that makes absolutely no sense,
None.
right? But listen, when these are private equity funds that are sitting on $10 to $15 billion, they got there some way, somehow they got there, right?
Well, they have to deploy that capital too. Remember,
Yes.
my
Yeah.
private equity experience, there's a ticking clock on your money.
Exactly. And so what it is they'll bolt the firm on at a higher multiple, and then they'll, lay off a ton of people, cut expenses, and then all of a sudden, they'll turn a 20 multiple into a 14 multiple because they just true size the expenses there. Leaving a lot.
But then they'll roll it into the next fund, right? And then the cash flow characteristics of the investment are what's attractive to that fund, and the investors in the private equity don't really understand what's in there, how the sausage was made. It has positive cash flow, so then you build 70% of your book on legacy cash flow type businesses that you bought. You took every expense out of them. You made them as efficient as possible. By the way, to the detriment of the client who's receiving service from that firm. And then you go out and try to find another 30% of your book that's going to give you that growth that allows you to market your next fund. I get it. That's why I'm not in private equity. That's why we don't take private equity money. We're approached once a week by private equity wanting to invest in us, throwing crazy multiples, non-controlling interest. Well, yeah, okay, it's non-controlling, but you're going to come to me in about 5 years and tell me that you have to liquidate. Mm-hmm. That's going to screw up my operation if I need to replace that capital, because then I have to take part in your marketing and you being able to sell us to another and making, doing all that stuff. And that's not my focus. My focus is on my clients. So it's a tough quandary for those in our firm, especially for, people who are building very successful practices. Like, what do you do at the end of your tenure? Because the easy thing is to go take that high multiple and hope your clients do okay. We struggle with that. You can tell you kind of hit a nerve on that one. And in my experience in private equity, I absolutely understand what's going on with the private equity firm and why they're attracted to our business. Our cash flows are our margins are incredibly attractive to them.
Yep.
And it is more like an annuity than a very vulnerable EBITDA type play, right? So, even in bad markets, we do okay. Whereas, $5 million in EBITDA can disappear overnight. If somebody changes a tariff rule,
right?
A little timely right there, right? So I hear what you're saying. I think that's a real problem in this industry.
Yeah. And so let's talk a little bit. I mean, in the last 10 years, you guys have grown from around, we'll say 450
It's
million.
about 25% per year.
Yeah. What kind of vision do you guys have for the next 3 to say 5 years, Cahaba?
Oh, I don't know. I would love to tell you that I'm smart enough to be able to predict out 5 years or 3 years, but what I will tell you is overall, rather than a 3 to 5 year thing, we don't do it that way. We look at our structure. So what we're trying to do is recruit, train, and retain really high quality people that want to deliver a great service to our clients, financial planning service, and make them as successful as we can so that they have the financial wherewithal in order to buy me out when I'm done, and buy Brian out, and buy the other partners out, so that it's a self-sustaining environment, ecosystem, if you will, where you don't have the bad incentives that come in by taking outside money. You're keeping it internal and using the corporate balance sheet in order to enable your younger people to be able to afford to buy in. And as their cash flow improves, as they grow more senior in the firm, they're able to buy more of the firm. And eventually I'm able to exit and they're able to enter. And then the next generation, they need to start doing that too. So, it's a long answer, but ours is recruiting really good people, retaining real good people, training them like they could go work anywhere, and treating them like they don't want to go anywhere.
Mm-hmm. So it sounds like you guys kind of already have, your G2 plan in process.
Yeah.
When that time comes,
Yeah.
you guys are
And
all set.
we have one partner who's been through the G2. We have L10 meetings every week. We're very intentional within our succession planning. We are fully aware that we're doing something that's never been done. And it's not easy.
Yeah.
You've got to be real honest, and it'd be very easy for me to sell my stake in this firm for an incredible multiple right now. But I and my partners care more about our clients than we care about our personal wealth. We're doing fine.
Mm-hmm.
So do I have to have that big lick and go to tell everybody how much money I made? I don't. That's not who I am. It's not in my DNA, and it's not in the DNA of those that are here at Cahaba.
I like that.
And sorry, Mike, I feel like I'm doing all the talking over here. I keep on cutting you off.
Oh, no,
Questions are coming to my mind here. I was going to say, you mentioned the clients and, that high importance of them at your firm, especially considering, the timely, you mentioned volatile market,
Mm-hmm.
What kind of messaging has resonated most with your clients during this time, especially with the tariffs and just the economic uncertainty?
So again, we're financial planning at our core. So we lead with detailed, extensive financial planning. We write our own software. We'd love to find an outside software source that met our needs. We haven't found one yet. So we write our own software. It's Excel-based, so I'm using software in a very general way. But it's extremely detailed. I joke with clients, you can lie to your spouse, but you can't lie to your financial planner. I will look under every rock and I will find it. So, and that doesn't get, it gets about as much laughter as it got on that right there, but it's true. So, we're really focused on the financial planning so that people understand their cash flows. If you approach problems or anxieties from a fact-based standpoint versus an emotional standpoint, it tends to get you to a place where you have an understanding and can calm down and control it. Because you've been told or heard something on CNBC or Fox Business News or whatever about tariffs, and you don't really understand tariffs. And what you have to understand is nobody does. And a lot of it's just talk right now, and it's not actually in place. Some of them are, yes, and they are changing some business, but a lot of it's just talk. But then if you look back and I look at your cash flow and I say, hey, Ashley, you're young. You're in a surplus for the next 15 years, assuming that your employment stays constant, and let's say it grows at 3%. You should be praying markets sell off, because it gets us to be able to buy in with that surplus at more attractive multiples, right? Because we're not taking any money out of this for the next 15 years. So why are you nervous about this? That's a way you've never thought about it. And I flip the coin on you right there. And then I turn you into somebody who's like, oh, I'm actually excited about this. I'm no longer nervous about this because I understand my cash flow. And you have an emergency fund built up for the unexpected. So we really put everything in context with them through the financial planning process that answers the anxieties, which is emotionally driven off the market questions.
Yeah.
Yeah.
So the short answer is we don't get a lot for most of our clients get this because we repeat it ad nauseum and pound it in their heads, but it is a different way of going about it. Most people in our business, advisors, approach things from a return standpoint because they're selling a product. We approach stuff from a cash flow standpoint because if you really, anybody who's watching this, Mike, Ashley, if you really think about when you get nervous, it's, can I afford it? Do I have the money to pay for this? Oh my God, am I unprepared? That's it. That's what drives that anxiety. And then that'll cause you to make mistakes. So if you understand the answers to those questions, you can avoid making those mistakes.
Absolutely.
And it's really hard. So those that want to replicate this, go for it.
Right. Right. I welcome anybody.
Yeah. More of us would be great, but you're not going to do it because you're going to realize it's hard.
Yeah. I couldn't agree more with that. Go ahead, Mike.
Oh yeah. So what I wanted to ask you about there is when you guys have 3 offices right now. Are you planning on opening up other offices in other locations?
If we found the right person, it really matters about the person and sort of the collection of business that's within that territory. We'd absolutely open an office anywhere for the right party. But Mike, it's really hard for us to find someone who, we don't sell insurance. We could probably make 3 times more in revenue than we make today if we sold insurance, but we don't, because that violates our fiduciary duty. Estate, we advise, we help structure, we strategize, but then we go to outside parties to do estate. Taxes, we don't do taxes in-house. We outsource to trusted people that we work with. And their motivation is that they do a bad job. They never get another referral from us. And oh, by the way, we're probably going to pull every client we pulled to them. So we can hold them accountable. But who benefits from all that? Our clients do. They get better services because people are motivated to produce good outputs. So we don't charge for any of that. We're fee only. We're not affiliated with any fund company. There's no 12B1. We don't do A shares. We don't do C shares unless we inherit them from legacy accounts, and then we try to get rid of them when we can. We're just weird that way. So when I try to recruit, or Brian tries to recruit, or Henry or Chris or Don or Lewis or any of the other shareholders, we try to recruit. There's so many bad things that others are already doing that they don't know that are bad. And I don't mean judgmental to them, because many times when you're raised in a firm like I was at Bankers Trust, Deutsche Bank, you're told to do stuff and you think it's cool because you're young and you're learning. You don't have the perspective or the relative perspective to say, is this really best for the client? They don't teach you that. There's no class like that. Trust me. So when we're out recruiting people, you kind of got to do a really deep dive into who that person is and what drives them and what they want to do. And finding someone who's driven to help is hard, unfortunately. Hopefully it'll get easier as we become better known and others like us that are doing it the right way. We're by no means we're the only ones doing it this way. The client gets smarter. And I know the CFP is trying to do a big marketing campaign. They're just upping our dues because they're going to spend more money in advertising the value of the CFP and our approach. That stuff excites me. I'd like to change this industry. I'd like it to be to the benefit of the client, because you can still make a great living and have a great firm doing it the right way.
Yeah.
Sorry, I give long answers.
No, I think it kind of like adds to your point too of your culture of wanting to teach the younger advisors and help them learn and grow versus, finding someone who's already has their viewpoints, learned one way how many years back, stuck in their way, they think their way is right. It's almost, would you agree that it's almost, easier and better to just mold the younger generation and help them?
It's certainly easier, but I'll use myself as an example. I was 44 when I came into this. There was lots of stuff I didn't understand. I mean, I took the CFA through two sections. I've never done the CPA, although I claim that after 6 months of studying, I think I could pass it. But hopefully nobody ever challenges me on that. The CFP, honestly, is my opinion, and it's biased, the most valuable designation I've ever been involved with, because I use a piece of the CFP curriculum every day of my career. I'm not saying CPAs don't, but if you go into, audit, or you go into corporate, or you go into personal, you're only using that silo of what you learned within that test. CFA, everything that's on that test, you're going to use 10% of that in your actual job. And, if you're on the equity side, you're not going to use any of the fixed income and vice versa. So I just think the CFP from a designation standpoint has the most robust amount of stuff you learn that's actually applicable within our profession. And it's not just passing a hard test. All those tests are hard. They're all hard. They should be hard. But this one is really focused on making sure that the practitioners learn what they need to know in order to do a good job. I don't know if that really answered your question.
No, I think it kind of did in a way.
I guess I would say I'd never lose hope.
Yeah.
That there are certainly other Will Jacksons out there who could be mid-career, but it is easy to bring the young person straight out of. We love. I shouldn't even say who we love because it's a competitive age, but we love really detail-oriented majors in college and detail-oriented professions that don't necessarily treat their people very well. We can go in and recruit from those environments and offer those people a substantial improvement in their career, and they found it very attractive, and it's a great place for us to recruit from. So those are definitely easier to train. But I'm not saying I give up hope on I like a good challenge.
Yeah.
And do you guys only recruit, let's say in newer talent, college graduates, or anybody that's bright and hungry and sharp?
Generally, it's with college grads, or it's with people with other designations, or potentially on track to get their CFP. We generally stick within that, and we have a pretty extensive interview process where we have very intentional filters that are built in within the process to help us gauge who the right people are, and we've been refining that for years. So we, because it's expensive to train people. It takes a long time to train people to do the job that we do. So the last thing you do is want to train somebody for 2 years when they're really ready and viable, and then they leave. So you got to have somebody who really believes in the mission and the values of what we're doing. That's key, whether you're a new person or whether you're somebody who's coming from the industry.
Well, thank you. I think, Will, that's kind of the perfect note to leave us off there. Thank you so much for joining us on the show today.
We didn't even talk financial planning. This was easy.
That's the whole point, right?
Well, I appreciate the opportunity to let more people know that we exist.
Yeah.
And there are other competitors that do it the right way. I don't want to imply that we're the only ones. But I will say that we're few and far between. So if anybody's watching this that's looking for a CFP or a financial planner or an advisor, make sure they have a CFP. And then go do an interview and find out how they do their business.
Thank you. I mean,
yeah, I like that.
I really appreciate it too, because I feel like when you talk about it, you really do have such passion and you believe in what you're saying. So,
yeah, I call it coming with receipts. You can challenge me on anything I said, but I will come with you with database.
There we go.
So come strong.
Well, it's been absolutely fun, and very inspiring as well. So, and to all of our listeners, thank you again for tuning in to another episode of the What Matters podcast. Stay tuned for more thought-provoking conversations ahead. Until next time, take care. Have a great day, everyone, and thanks again, Will.